What is up guys, this is your buddy Deepak Bangar from Profitable Traders, and in this video we are going to see 6 practical steps or the tips to protect your most important asset in the stock trading business, and that is nothing but your trading capital. We are going to see how trading capital and trading psychology are interconnected with each other and how they affect the end results of the profits or the losses in your trading account at the end of the day. And I'm going to share with you few guidelines about how much should be the starting or the initial trading capital to start your own stock trading business. So let's get started. But before that, if you are new on this channel and if you haven't subscribed to our channel, I suggest hit that subscribe button to get notified about the quality stock market education videos which actually work in the real market. Let's discuss now the 6 practical suggestions and the tips to protect your trading capital. First one is always put aside only that much amount of money as a trading capital which you do not need for at least 3 years. Why this is important is because if you have some other commitments for which you need this capital in between, and if at that particular point of time if your trades are in losses, you might be pressurized to close your trades in the loss and get that trading capital. Second point, trading capital should be adequate. Okay, it should not be too much in the initial stages and it should also not be too less. The problem of having too much of trading capital at the initial stage is because when you lack the skills, when you lack the experience and the knowledge, then what happens is there is a more risk of losing that capital, and big losses are a realistic possibility in the stock market, especially when you are new and if you are not doing the guided trading under the mentorship. So in order to avoid those big losses and the psychological impact that they are going to have on you, I would suggest you start with a reasonable capital. Don't put all of your capital at risk in the beginning itself. Another important point is, if you have the very less trading capital, then what happens is the returns that you generate from that small trading capital, let's say 10,000, 20,000 rupees, the returns that you would be generating are not financially rewarding enough or the motivating enough to continue the process of learning the stock. What I mean by this is, let's say a person is earning 1 lakh rupees per month from his regular job, and then he starts trading with, let's say, to try it out, his things that, okay, I'll start with, let's say, 10,000 rupees or 20,000 rupees just to give it a try. And then if this 20,000 rupees, even if it generates around, let's say, a 2% return in first month or 3% return in first month. So that amount of money which will be generated is not motivating enough for him or her to continue the process of learning the trading. So it should not be too less and it should not be too much. You have to find a midway which is best suitable for you. Third important tip is never ever borrow or take loan of money for trading. If you borrow the money, then you always are under the pressure that you have to pay your EMI or you have to pay back this money to the person whom you have got this money from or borrowed this money from, and that actually puts you under pressure of taking some trades which are not according to your system, breaking your trading system or breaking the rules of the system. This actually results in the losses. Fourth tip is always focus on the process of learning trading and not the profits in the initial stages. See, whenever you are starting out, it is important to learn this stock trading as a business, and any business you have to learn first, and then only you will be able to earn money out of that business, and stock trading is not an exception. Don't think of how much money you are making. Just think about how are you becoming a better trader day by day by learning it the right way. Fifth important point is capital preservation. Your trading capital preservation should be your number one goal at all stages of your trading career. See, this is similar to an analogy of playing a cricket match. Okay, So a player first has to learn to how to protect his wicket. That is important. Okay. Afterwards, only if he is able to protect his wicket, he is going to be able to the next stage of making some ones and two runs here and there. And after that comes a stage when there is a loose ball, you hit that fours and sixes. So it is important to protect your wicket first. And in trading, it means is the protection of your trading capital, which is your most valuable asset in your business. So don't do the risky forms of trading. Don't take too much of the risks per trade, and try to protect your capital at all costs, because market is going to give you an opportunity for sure to make easy money during certain periods of the year. But if you don't have the trading capital left till that time, then you are not in the game and you will not be able to take advantage of the opportunity that the market is going to present. Market is eternal, your capital is limited. So always ensure that you protect it to the best of your ability. Sixth tip is, once you start making some profits from the stock market, always use the market's money to risk in the future trades, and not necessarily you have to risk your own trading capital every time, so that you can trade in a worry-free state of mind with confidence. So these are the 6 practical tips to when it comes to your starting trading capital or the initial trading capital and how to protect it. Now we are going to see how much trading capital actually you need to get started, or the capital requirement of initial or the starting capital to start your own stock trading business. Now we are going to see how much capital, the starting or the initial capital, is required for starting your own stock trading business. So there are multiple of factors which you need to take into consideration when it comes to arriving at this amount for yourself. Have a look about which markets you plan to trade. If it is a cash market or the equity market, futures and options market, or the crypto market, forex market. So there are different margins requirement for each of these different types of markets, and also the instruments that you are going to trade, like futures, the margin is different, the capital requirement will be different, and options it will be different, cash market it will be different. So that's the first thing. Second thing is, it also depends on your risk management strategy, how much risk you are going to take per trade, your trading style, whether it is you are a conservative trader or a safe trader, or whether you are an aggressive trader. So it has got lots of implications. And also whether you are doing the trading under guidance of your mentor, who himself is a provenly profitable trader, or whether just you are doing to do the trial and error method on your own. So that also has got a huge effect on deciding your trading capital. For example, the students that I teach, the My Trading system, which is a more safer style of trading, where the risk of loss is very minimal. So what I do is, I suggest people to start with a decent trading capital. So at least 1 lakh rupees, and preferably 5 lakh rupees, and anything above it. The reason why I can suggest them is because I am going to monitor their trades. I am going to teach them a proven system which I myself have tested in the past, and I am using that for my own trading. So it is like a guided trading for them, so they can start with a good amount of initial capital, so that it feels rewarding for them to continue this process of learning the trading. But if it is the same thing for a person who is going to try the things on his own, I don't suggest that they should start with 5 lakh rupees of trading capital. I would say even a 50,000 rupees of trading capital is enough for you to learn this skill. And remember that what we discussed before is, you focus on the process and not on the profits. The process of learning this business. If you are trading in a non-leveraged markets like cash markets or the equity markets, I would suggest 1 lakh rupees is a decent enough capital to get started, to learn the trading, and then you can always scale it up by adding more capital as and when you become more confident about your trading style, your trades, and your skills. That is going to boost your confidence to increase your trading capital, and afterwards it's going to be the same thing. Only thing is, you just add zeros to your trading capital and add zeros to your trading income. That's how easy it is going to be moving forward. If you are trading the leverage markets like futures and options, I would suggest do not think of entering these markets if you don't have at least 10 lakh rupees of capital. That's just my personal opinion, and always remember that it's easier for smaller sizes trading accounts to get wiped out faster, especially when it comes to the leverage trading like future and option or forex or crypto, rather than the bigger sizes accounts. They are difficult to get wiped out if you have the proper risk management in place. So that's all for today. I hope you enjoyed this information, and if you liked what I shared, do not forget to hit the like button, subscribe to our channel and hit the bell icon so that you get notified about my future updates about quality stock market education that actually works. Thanks a lot for your time for watching this video, and I'll see you in the next video. Bye for now.